Hello and welcome to the Bitcoin Today podcast. Here is everything you need to know about the price of Bitcoin on Tuesday, July 15th. And that price is certainly on the move. Yesterday, of course, we had this all-time high of $123,000 briefly on Bitstamp. It was actually the fourth all-time high in 5 days. And now we've already seen a decline. Early this morning, I'm in Europe by the way, it was quite a drop, more than 6%. And I'll say it right away, a 6% drop for a normal asset like a stock or a commodity, that would probably cause some stress. But for Bitcoin, it's nothing out of the ordinary. We've seen much larger price drops and surges. The cause of this 6% dip, it's mainly profit taking. Many investors decided to cash in some gains. There were also some long squeezes affecting those who were betting on the price to continue going up. But I believe off the top of my head that about 300 plus million in long positions were actually liquidated. It's not a huge amount, but it certainly makes an impact and it creates volume, and that leads to a drop. We've also seen that a major Bitcoin holder, someone who's been around since the early days of Satoshi Nakamoto, we don't know who it is, but we know it's a big one, he's decided to sell some of their Bitcoins, and a large amount flowed to trading platforms, and that's so-called inflow is actually pointed to potential increase in supply on the market. And that's a standard law of economics. If supply increases while demand stays the same, prices will fall. And many traders are now anticipating this, thinking, oh no, a lot of Bitcoin is hitting the market, so prices will fall. It's just an expectation. It's nothing more than FUD, actually, fear, uncertainty, and doubt. In practice, it often turns out to be less dramatic because there's massive demand for Bitcoin. Still, the price does react to something like this. So what's going to happen today, and what role will Wall Street and the US play in this price movement we're undoubtedly going to see from Bitcoin today? Before we get to that, let's look at our sentiment score. It has dropped even further. We're now at a 3, which is not too surprising. Altcoin prices, they've taken a significant hit. If you look at coin360.com, for instance, the heat map, you'll see a sea of red, and it's no wonder. The Bitcoin price drop naturally pulls many altcoins down with it. So the trend for altcoins is definitely not turning bullish, as it still seemed to be the case yesterday. Instead, it has become more bearish. And you really need bullish altcoin trends for a structurally good sentiment, which is ultimately reflected in that sentiment score. So we'd want to see altcoin prices rising for several days, or at least not falling rapidly. Just look at the heat map and you'll see that many altcoins have taken a serious blow. It will likely recover, but for now, that's why we are at a 3. Okay, what about Bitcoin's monthly volatility in July? At the moment, it's the same as yesterday. Yesterday was a big day with that all-time high, but for now, the volatility has remained stable. The price has stayed neatly within this expected range of 17.2%, the monthly volatility for July at the moment. It could still increase, as the average over the last 6 months is about 22%. And this suggests that we will likely see some more breakouts in the remainder of this month, within a range of about 101,000 on the low end, and more interestingly, if you're waiting for a new all-time high, about $128,000 on the high end. So that's the current range. Now you can also look at this day by day. And the average daily volatility, if you look back at the last 30 days, is about 4.6%. It was the same yesterday, and it hasn't changed today. Based on the highs and lows we've seen yesterday, which were quite far apart, with a dip to 119,000 and a high of 123,000 something on Bitstamp, we have an expected range for today, and this is interesting. The range is expected to be between roughly 117,800 on the low side and 124,500 on the high side. Well, just like yesterday, but this time the other way around, we've already broken out of that range. We've already passed the lower boundary. As I record this podcast, it's now about 1 o'clock p.m. in Europe, and the price is currently 116,900. That's well below the bottom of the range, and that is a sign of things to come. If the volatility is already larger than it was yesterday and the day before, it's rising every day, you know something is going to happen. And it will be an interesting day. Of that I'm pretty sure, just like yesterday was. So we already have higher volatility than yesterday. This really promises to be exciting. By the way, if you're wondering on how to calculate this, how to calculate that daily volatility, I've covered that in the show notes from the July 9th podcast. You can find a complete formula over there. Okay, let's go to the daily chart. What's happening on the daily chart? By the way, if you'd like to see all the charts, you can find them in the show notes for this podcast at bitcointodaypodcast.com. Yesterday, I mentioned that the chance of a price drop was high and the signals were very clear. We had a decreasing trading volume while the price was rising. That is a classic bearish signal. We've also talked about the rubber band effect. The price was stretched too far from the MA20, the 20-day moving average. That usually creates kind of a snapback effect, pulling the price down, and that is exactly what happened. So nothing new under the sun. That 6% price drop was absolutely expected. However, although the price dropped, it didn't have any effect at all on the trend. The price and the trend, are two different things. The trend is currently bullish and it will remain bullish for the time being. There's nothing on the daily chart to suggest that it's turning bearish. It remains stably bullish. So what about today? Interestingly, if you look at the daily chart now, you'll see two signals. You see both a bullish signal and a bearish signal. Well, let's start with the bullish one. Firstly, the trend. The trend is bullish. Don't forget that. But the signal is that even though the price took a hit, the 6% drop, the volume has shot up significantly. And a high volume on a falling price, that's divergence. But this time, unlike yesterday, this time it's a bullish divergence. Then the bearish signal. The price is still far away from its own MA20, that rubber band again. However, if you look back at historical charts, you'll know that the combination of a bullish trend and bullish volume, and specifically bullish volume divergence, usually takes precedence. That rubber band isn't as strong in this case. So we have bullish trend on a daily chart, we have a bullish volume divergence. This typically indicates some panic selling, which means the daily chart is now suggesting that a price increase is more likely than a price decrease. But there's more. We also discussed support levels yesterday. We used the Fibonacci retracement tool. If you look at the daily chart, you'll see the price has broken through the first retracement level at 23.6%. And that's around $117,400. That floor simply didn't hold. However, it doesn't currently look that the price is heading for the next retracement level at $113,700. Funnily enough, I would actually hope it does, because if it would fall to 113,700, that would validate the peak we saw, yesterday's all-time high. It would then be a legitimate top. Technically, we would then be on our way to a new low, which would undoubtedly be higher than the previous one, keeping us neatly in a bullish trend on the daily chart and setting us up for new all-time highs in the longer term. Now, I'm not a fan of too many all-time highs in a row, just like we saw this weekend. As I said, 5 days, 4 all-time highs. That very often indicates a kind of a feverish euphoria. I prefer structurally rising prices over frequent parabolic surges. But honestly, I don't think a drop to $113,700 will happen today. Looking at the enormous trading volume we already have today, it's 25% more of everything we've seen yesterday. And here in Europe, it's only like 1 p.m. at the moment. I'm guessing we've likely already hit the dip. So you cannot conclude much more than that from the daily chart. But what does the hourly chart tell us? Well, to start with, the hourly chart, that's now bearish. However, the moving average lines are still a bit chaotic. The MA20 is below the MA50, but the MA200 and the MA50, they're still moving up. In short, it's not a real confirmation of a stable bearish trend. I do think that this bearishness on the hour chart, that will go away very quickly. It won't last too long. What about Fibonacci on the hourly chart? Here the signals are much clearer than the daily chart. The first retracement level at 23.6%, around $119,500, it held as support for 5, even 6 hours. The price was constantly tested there because traders trade on these levels. They look at the Fib retracement tool and they will buy at support. They will buy at retracement lines. As a result, you'll see the price bounce off that level. Eventually, though, it broke due to too much downward pressure, and the price headed for the next retracement level at 117,200. And you guessed it, that level also held for several hours, and technically it's still holding now, more or less. As I'm recording this, it's now about 1 o'clock here in Europe. the price is right back in that support zone. The price is now at about 170,000. Still, the support zone, it's still holding. And that leads to two positive takeaways. First, the downward pressure seems to have eased for now. You can now see it in the trading volume, which is decreasing significantly. And because that support zone is holding, we have a valid top for the all-time high on the hourly chart, and that's good news. So it looks like the price has stabilized and the volatility has died down a bit. It seems like we've found the bottom. Is a breakout coming? Honestly, I think so. I think we could see a breakout today. Which way it will go, that is hard to tell from the charts alone. If I had to rely purely on the charts, I would say the breakout will be upwards, possibly even towards a new all-time high. And the reason for me is that the longer term charts, well, they're simply bullish. We've had a retracement, it has more or less held on the hourly chart, and there are no major alarm signals on the charts at the moment. However, today, there's some news coming out of the US about inflation. Expectations are all over the map. Some analysts say inflation has risen sharply, while others say it's not a big deal. Others say it's already incorporated in the price. There's also talk about the Fed chairman, Jerome Powell, of course, potentially being replaced. All that FUD, all that news, all those opinions, there's a lot of disinformation and opinions at the moment. So there's two scenarios, as almost always. If inflation turns out to have risen, the likelihood of interest rates hikes in the longer term increases, of course. This will create FUD, fear, uncertainty, and doubt, which almost always leads to a brief but definite drop in the Bitcoin price, as it simply tends to follow Wall Street's lead. If it turns out that inflation isn't as high as feared, and analysts say it was already priced into the stock market, then Wall Street might rally and the Bitcoin price will go up as well. In that case, I think it's just a matter of time before we could see a new all-time high, which could come really quickly. So those are the two scenarios. Disappointing inflation news will likely lead to a falling Bitcoin price today. Favorable inflation news will likely lead to a rising Bitcoin price. Either way, I do expect a lot of volatility today. And to be clear, what I'm sharing with you in this podcast, it's my opinion and my expectation. I'm not predicting what will happen, nor am I giving you tips on what to buy or to sell. Please do your own research, just like I do every day. And that way you'll be in a strong position to make your own decisions about buying or selling Bitcoin or other assets. Okay, I'll talk to you again tomorrow in the next episode of the Bitcoin Today podcast. Until then.